Happy Wednesday out there, folks. This is Darius Dale here to present our macro minute for Wednesday, September 14th, 2022. Starting with asset markets, we have stocks mixed this morning with Asia and Europe lagging, commodities mixed with industrial metals lagging, crypto flat, dollar down, global bond yields up. So market moving headlines. So we got more jawboning out of the Bank of Japan. The yen pulled back from a slide towards the 145 level versus the dollar. After reports, the BOJ conducted a so-called rate check with traders. They're trying to see sort of what levels the market's really kind of leaning into. And so this is a step further than verbal intervention. But at the end of the day, we know the yen slide is not going to change unless, of course, we see a material change to yield curve control, which for now, for the time being, just given some of the recent data we got out of Japan, particularly on the nominal wages front, that seems to be an unlikely outcome over the medium term, over the next 3 to 6 months. We may see a revision to the policy if inflation is deemed to be persistent. Let's call it, 4, 5, 6 months from now, as we get closer to the end of Kuroda's term. But anyway, for now, we don't expect that shade to change much. Anyway, shifting gears, more bearish signals for the crude oil market. So the IEA trimmed its oil demand forecast by 110,000 barrels a day for 2022, citing COVID lockdowns, cutting Chinese consumption. China will see a contraction of 420,000 barrels per day in 2022, a much steeper drop than their previous guidance. Shifting to the U.S., oil stockpiles rose by 6 million barrels last week. The API said to have reported it would cap the biggest 2-week gain in inventories in 18 months, if confirmed by the EIA data. So as we see, no reprieve, no rest for the weary for those on the long side of crude oil. And then lastly, public outrage drives policy when the regulatory framework remains undefined. And I'm talking about you, crypto. So we had arrest warrants were issued for Terraform Labs founder Do Kwon and 5 others by Seoul court following the 40 billion wipeout of their crypto ecosystem earlier this year. I have no idea whether or not there was any foul play involved. My speculation is there probably was not. It was just a dumb idea. And a lot of, less informed investors chasing what ultimately turned out to be a dumb idea. But again, when public is outraged and people are looking for answers, it turns to, the regulatory environment gets defined in real time. And this is obviously not the best outcome for the digital asset ecosystem. So hopefully we get our act together, both just here in the US, but also globally, because this obviously isn't great. Big movers this morning. Germany's DAX index down 1% to down 5% month over month. Japan's Nikkei 225 index playing a big catch up overnight, down 3% to down 3% month over month. And then 1 year, 1 month overnight index swap forward rates up 26 basis points week to date. These are dollar contracts to 3.95%. Up 71 basis points month over month. We're now at 4.25 in terms of terminal Fed funds rate expectations, with the 175 basis points of rate hikes priced in between now and December. So we are very much, I think I talked about this in the lead-off morning note this morning for those of you who subscribe, but we transitioned from phase 3 now to phase 4 of the monetary policy, the global liquidity cycle downturn, whereas, we call phase 1 was the Fed and other central banks catching up to the market's realization that transitory was wrong and that they needed to tighten policy a lot more than what had been priced in the markets. Phase 2 was the markets taking that and expecting dovish pivots, sometime in the ensuing quarters as a function of the slowdown that was likely to ensue from all the tightening. Phase 3 was the central bankers, particularly the Fed, pushing back on that expectation that, hey, there's going to be rate cuts in QE over the risk manageable horizon. And then now we're in phase 4 where fiscal authorities are very much keen on sort of capping things like energy prices, et cetera, and lending subsidies to the private sector to deal with the ongoing, energy shock, particularly in Europe. And we're seeing it obviously in the US as well in terms of student debt relief, the Inflation Reduction Act, et cetera, et cetera. And now all that incremental fiscal stimulus, while particularly if we give direct subsidies to utilities, may in fact weigh on headline inflation. It's certainly weighing on things like headline inflation via the Strategic Petroleum Reserve release, and in terms of what that's done to gasoline prices. But the resulting impact is that consumers are going to feel richer. There's a wealth effect associated with that share of wallet shift back towards more core consumption items. And that share of wallet shift is driving stickier core inflation, as we just observed in the August CPI report yesterday. And we saw it in the UK data as well, the Swiss data this morning as well. So if you're bean counting this, you realize it's not just the U.S. problem. This increase in core inflation dynamics, this lagging impact of core inflation, really is something that's going to remain ongoing for a while. But anyway, just get into the charts here, just briefly before we turn to the risk management. Just studying the history of Bitcoin bear markets, because we're talking about crypto this morning. We're at about down 70% from the highs, as you've seen going back to really the history of the beginning of this asset class. 80% seems to be kind of the line. And if you notice, so that you were new, I changed the pin color to yellow, an ode to John Madden. For those of you who are fans of American football, truly a legend and a great human being. Rest in peace. But anyway, as we can see, these crypto bear markets, particularly Bitcoin specifically, tend to culminate at around down 80%. That's not to say it can't go down 90% or thereabouts, but down 80% seems to be where we trough. And so we're 1,000 basis points away in terms of the peak to trough decline. But I want to remind investors who were inclined to buy the dip too early, who are inclined to dollar cost average to themselves to oblivion, DCA here, DCA here, DCA here, DCA here, DCA here. If you're inclined to do that, just be aware that it's not 1,000 basis points that you're risking when you go from down 70 to down 80. This local drawdown math here shows the percentage drawdown in local price terms to the next 1,000 basis point max drawdown marker. And right now we're in this column here, minus 60 to 70. We're trying to go from minus 70 to 80. And it would cost you a 33% decline on your invested capital to go from down 70% peak to trough to down 80% peak to trough. So I just want everyone to be aware of the convexity associated with some of this these large price movements. And obviously, if you're down 80%, you need to be up 400% to get back to break even, which I think a lot of investors are realizing the hard way, particularly those who bought into the highs of the crypto cycle last November, when we at 42 Macro were telling investors to get the hell out of high beta risk assets very loudly, very clearly. Anyway, U.S. dollar, getting bullish FAMs, U.S. dollar, it's in the middle of its private range. Gold, bearish VAMs in the middle of its probable range there. Sorry. 10-year nominal treasury yield that is overbought this morning. High yield credit spreads, those are broken to bullet, back to bullish VAMs. You got about sort of in the middle of the range there. S&P 500 neutral VAMs in the middle of the range. Important crowding signal from our leadoff morning note there this morning. So definitely check that out. VIX bearish VAMs, that's overbought. But let's find out if it doesn't remain bearish VAMs. Will it remain bearish VAMs? Or are we about to break back out to neutral? Is the key question here. NASDAQ 100 neutral VAMs in the middle of the range. Russell 2000 neutral VAMs in the middle of the range. Bitcoin bearish VAMs, more or less in the middle of the range. Same thing with Ethereum there. Shanghai Composite neutral VAMs, middle of the range. WTI crude oil bearish VAMs, middle of the range. Oops. And then, ag bearish VAMs, that is overbought this morning. And industrial metals in the middle of their range, still bearish VAMs. So with that, Darius Dale presenting our macro minute for Wednesday, September 14, 2022. Best of luck out there today. Cheers.